Hello, I'm Vaishali Kohli and you're watching NewsX. Now, the Indian stock market is holding the special Muhurat Trading session today on the occasion of Diwali 2025. The Muhurat Trading session is an annual ritual considered highly auspicious and marks the beginning of the new Hindu calendar year of Vikram Samvat. The Muhurat Trading session is a symbolic one-hour trading session conducted by the Indian stock exchanges and the commodity exchanges. This year, the BSE, NSE, MCX and NCDEX mark the start of Samvat 2082, with trading beginning at 1:45 p.m. and lasting till 2:45 p.m. All right, viewers, so this is of course a very important trading session which is happening today. The Indian stock market, of course, is holding the special Muhurat trading session which is today, and this is on the occasion of Diwali. And of course, I have my guest with me, Professor Aman Agarwal, who is the Director, Indian Institute of Finance. Now, Mr. Agarwal, this is of course a very important trading Muhurat which is happening today in the afternoon. What more can you tell us about it? Professor Agarwal, can you hear me?
Yes, I can hear you very well. Are you able to hear me?
Yes, Professor Agarwal. So I was just trying to understand from you. Now, this is of course a special Muhurat trading session which is happening today. Please give our viewers a better understanding of what this is about.
You see, the Muhurat session is more like a beginning of the year. We have the Hindu calendar, which actually begins with the Diwali, the New Year celebrations come up technically in the Hindu calendar. We say that the New Year is beginning with the Diwali, and that's what it is. Where the trading is to be done, it's more of an auspicious kind of a structure. It's more like what we refer to as Shri Ganesh. When we say you're wanting to Shri Ganesh some activity, you want to begin with some new activity. So it being the first day for the new year, they want to, basically do the Shri Ganesh, or like a prayer being done before the God that we are getting into the trading activity. And that's what actually this Muhurat trading is all about. It is not that it is for the purpose of trading, but since you want to do that trading for that particular day, and everybody, all traders who actually have the main business of trading, they would like the business to go on. So most of them log on, and that's where the maximum amount of trade comes in just 1 hour period, which is going on. Although the block seats for equity open between 1:15 to 1:30, pre-opening of session for equities happen between 1:30 to 1:45, and the trading between all of the commodities, equity, F&O options and currencies takes place between 1:45 to 2:45. And then the auction and closing takes between 1:30 to 2:15. So these are the timings in between all this happens. Primarily, the main functioning timing is at 1 hour between 1:45 to 2:45 when the trading happens. And as I said, it's more of an opening celebration for the year beginning for a business. And that's where the critical relevance of this Muhurat trading is.
I also have with me Mitali Nikore, who's an economist. Now, Mitali, I want to ask you, what is the impact that you see of this on the Indian economy? And my second part of the question is, what is the impact that you see of this globally as well?
So first of all, very happy Diwali to you and to all the NewsX viewers. And, I think this is a very auspicious occasion. And, it's very important that we mark this occasion, the first day of the Hindu calendar year. And, many of us for many years have been there are small superstitions, right, which come out. The Dhanteras itself is such a momentous day when we mark the fact that we must buy and pray to to the goddess of wealth, and that's what we are doing in this Diwali period for many of us who follow that tradition. And really it's about keeping up these small traditions, like the professor also explained. Now, why does this matter to the economy? This is a very important relationship, because when we look at consumption spending, when we look at the behavior of the Indian consumer, a lot of it is motivated by the feeling that the consumer gets at the time of these festivities. The Muhurat trading is a way for the consumers in the equity markets to come and say, we are going to invest in our first stocks of the year. Our first stocks of the year have some value for us, and these are the stocks which will then hopefully do well throughout the next quarter, because people know that the consumer place their confidence in that particular company, be it an LG, be it a Tata Capital. All these stocks are doing well today because consumers have confidence in these companies, and they want these stocks to be the first stocks of the year. So the emotion of the consumer spending has a clear impact then on the economy, on the equity investments, and on the turn that the economic growth will take in the next quarter.
Professor Agarwal, now coming to you, I want to ask you now, usually the historical practice of this Muhurat taking place is in the evening, usually around 6 to 7 p.m. Why do you think this is happening in the afternoon this time?
Yes, you see, usually most of the festivities or pujas, as we refer to, happen usually in the evening. However, for offices, when you talk of offices, even yesterday when the Pavli was there and puja in the office was to be done, it's done in a specific occasion and timing. And accordingly, it is done usually in the afternoons, which is there. Around 12 o'clock also is the Abhishek Nakshatra in most times. And that's where you will see this particular Sikh community does most of its activities, particularly. And this is what Professor J.D. Agarwal, the chairman of the institute, talked about when the budget timing change was done by Yashwant Sinha after almost 6 months or so after an Economic Times article which came in or written by him, which talked about the Abhishek Nakshatra. So most of the good times for business and opportunities happen in the morning around 12 going onwards. In any case, an evening time is an odd time for the exchange because that's not a time when exchange otherwise also opens up. So I think it's a right time to do. However, one thing I would like to make clear here, we have had an extensive growth of investors or people trading on the exchange post-COVID, which was never witnessed historically, despite the educative sessions, both the NSE, BSE, or the other stock exchanges have been conducting. A lot of crores and millions of dollars have been spent in terms of educating investors to wanting to come in. However, we saw a flush of people coming in. Despite that, not more than 7 to 8% of the total wealth of this country is invested in the stock markets even today. In countries like US, Europe, and some of the other fast trading countries where trading began much earlier and the people locked their interest with the trading, there almost about 80 to 90% of the investment or the funds of the individual holders are invested in stock markets. And that's where the importance of stock market directly linking to the economy has been there. Traditionally in India, and even today, as I said, only about 7 to 8% of the total wealth of the nation is actually invested through capital markets. In fact, the bullion market, as my colleague just mentioned about the Dhanteras, is much more critical than even the stock markets in particular, because that's where the smallest of the people in this country invest. I remember visiting Austria, and then they were taking me to a tour where the Hungarian princess married herself in the Austrian, castle, and her dress had a few grams of gold, and they very proudly say this. In India, even a small person living on the street, in small jhuppadpatti, as we call it, small livelihoods which they have, even they have a few grams, at times 500 grams, at times 1 kg of gold in their normal functionality of life and specifically in weddings. So, gold and bullion market has been critical in this country, even more than the stock market in terms of real investment of people. However, that's where the linkage between the economy's growth and the growth which is happening in the economy takes place globally. Now, where the markets are locked. But countries like India, we have other markets which are more predominant in terms of economic growth and linking the stock market than just the stock market itself. However, it is still an important indicator, and it is very independent of the government today. Because if you remember earlier, till almost about 15, 20 years back, till almost 2007 or 8, whenever budgets came in, whenever activities of nature where political announcements were made, we saw the stock markets go up and down tremendously. However, for the last 22 years or so, we don't see that happen because they have become so much extensive. The participation of people has increased, and that's where it is not a government policy or a political decision or a political announcement which will make a major change in the stock market going up and down. And this is the beauty of the exchanges today in this country, that it has become that resilient and has got that independent stature and structure. And the importance, as I said, it's always you want to begin your new year. You see, even in an English calendar, where we have the new year coming on December end, we always say we want to create a motto of what we want to do for the next year. We want to do it in the first beginning of the new year. They always say if whatever activity you begin with your year, you will always continue with that. And that's the critical component, which is this business in stock markets is being represented by the Muhurat trading. As I said again, there is an extensive trading which happens because all traders in particular, and those who invest extensively in stock markets or keep it as a main operations of business in terms of their main profitability or money coming from as of today, which many businesses have shut down their business of operations and moved to stock trading, are actually trading this and using it as an opportunity to begin their business and activity for the whole year going on.
Mitali, now coming to you in terms of global alignment. Now, an earlier session may make it easier for non-resident Indians or, of course, foreign portfolio investors to participate, offering the overlap with their time zones. Could you break that down for our viewers, please?
Absolutely. I mean, if you think about it, the UK, people who are based in the UK have just sort of started their day. It'll be like a morning for them, and it'll be late evening for, those who are based in the US, and also parts of Europe can coincide with this time. And even for East Asia, it's not yet market close. For Dubai, this is a good time as well. So Indians who are based in any of these parts of the world, particularly, I think the markets which are most relevant for us today are the UAE, Saudi, and the UK, because these are the three locations where we find the maximum number of non-resident Indians who are actually participating in equity markets in a more active manner. We also have a lot of investments coming in from the US, of course, but still, the UK in NRIs actually still exceed the US NRIs in some way in terms of the market participation. And we see US NRIs are more active in the real estate markets and in the debt markets as opposed to the equity markets. And I would definitely say that, people who are not in India today, people who are outside India today, I have just come back from the UK after about, 2 weeks or so. And I can tell you that the love that, the NRIs have for India, the interest that they have in participating in Indian markets is at an all-time high because of several reasons. One, of course, their buying capacity is at an all-time high. There are people who have spent 2 generations, 3 generations. They have done very well in these countries, and they have amassed, a corpus that they want to invest for India's growth and development. So that is definitely there. But then there's also the fact that India's economy is offering returns which are far higher than the returns that they can get in their own domestic markets. I mean, except for the UAE, India's stock markets are actually outperforming a lot of other emerging markets, and even outperforming the some of the London markets on certain days. So therefore, the fact that the Indian markets, equity markets, have matured so much, they are offering foreign stocks as well. They're offering options for people to put in short term stocks as well, short term trading as well. This creates a lot more opportunity to crowd in investors from all over the world, and particularly non-resident Indians.
Professor Agarwal, now coming to you, I want to ask you during this time, of course, the window is open. During this time, what is your advice to investors?
No, I think the Indian economy has performed excellently. The Q1 results were very high. The IMF projections have increased the GDP rate, and that also actually links in because when you have money coming in, only then can you invest. I would see a lot of trade happen today because this is something which will boost their career going forward, and that's an important belief because people work on beliefs. It's not that it's only facts and data, it's also beliefs which work on. I would also like to add a small component to my colleague's comment. Please understand that Indian exchanges are only are applicable to Indian nationals or Indian registered companies. So that means they are not global exchanges. Hence, anyone who wants to participate from even overseas would have to either register a company in India, which can be done, and then invest in the stock exchange, or has to be an Indian national, not a person with foreign, foreign status of citizenship can invest directly, even though he may have Indian heritage. but that will not allow him to invest. If he has not gone off his citizenship, then he can invest in the market. Or as I said, create a company in India, which is not so difficult to do, and then invest through the Indian company. So many companies, overseas companies, actually invest. Now, they may not typically believe in this, but those who have ownerships of Indian or Indian relations which are there, or are having managers who are managing those companies here in India, for those people would like to invest. So we will see actually a lot of trade coming today. In fact, you may see more trade which has happened in the last few days than what will happen in this 1 hour, because it's a auspicious feeling. It's a question of going forward, kicking your day or your year forward, and that is critical in this moment. The economy's impact is being felt on the exchanges as well. I said the other way is not so critical in India, but the impact of the economy's growth is there. Given the fact that the GST reforms have taken place, it has also left people with a little bit of surplus funding which is there. And given the fact that both women and men invest on the exchanges, we have them as investors and not as men and women. Many women will have surplus savings in their budgets, and which have just happened in the last 1 month. I think that money is expected to, if they're looking at investment, come in the stock markets also, because the markets have been showing a lot of resilience and positive growth in the last couple of months, as despite the tariff threats, despite the war threats and other disturbances which have happened in the last 7-8 months.
Now, Mitali, as an economist, I want to ask you, what do you think investors should look out for, and what is your advice to them?
So I think, of course, this is not to be considered any sort of investment advice. But with that caveat, and I completely agree with sir, most of the people that I also know, they have registered companies and are trading here through their exchange companies. But essentially, the point is that which are the sectors that are doing well and which are the sectors that are expected to do well. This is where I would say we are expected to see good activity in the market, and there where we expect to see higher returns in the market. I think all consumer facing sectors are currently doing very well. When we look at the FMCG sector, when we look at the auto sector, when we look at the electronics sector, these are sectors that have registered an exceptionally high level of sales in the last, I would say, definitely since the GST, changes were made, the GST Dhamaka Utsav, the GST Bachat Utsav, whatever we want to call it, it has been a remarkable success across the country. And there are estimates coming in which are putting sales in the Diwali week alone at 5 lakh crore rupees, which is unprecedented, because in previous years it has been, say, around 1 to 2 lakh crore rupees, and this year it's nearly 3 times amount of that we might end up seeing at about 6 lakh crore rupees. It might end at that. So all consumer facing sectors clearly doing well. The second area which has not received much attention but should is actually India's tech investments, and we can see that Google has come in and announced a $15 billion investment in India's first AI city, which is going to come in Visakhapatnam. We're seeing OpenAI come in, open a massive campus in Delhi, but they will also open back offices and GCCs across the country. The GCC sector itself, I mean, the fact that we have a new global capability center opening in some part of the other of the country, it's no longer just confined to Bangalore, but several other southern cities are playing host to the GCCs. We have one new GCC opening every day. So these tech industry, investments are also doing well. And I would say the third is traditional manufacturing, because India is understanding that it has to have a lot more Atmanirbharta, a lot more focus on not only assembly but also creating true high value manufacturing within the country is really the focus of the government. And I would say that these are also areas of investment doing very well. Finally, the all weather investment category, I would say, is real estate, because at the end of the day, whether it's residential or commercial, real estate is one category that has outperformed, if you look at the data, in the last 5 years, despite all trials and tribulations in the economy.
Professor Agarwal, now how does the increasing gold prices impact this?
You see, the increasing gold prices have actually raised a lot of expectations of the people. the investments are extraordinarily happening. People are actually taking an overexposure. There is an expected dip which is expected to happen in the bullion market, and that may happen anytime soon because these prices are artificially kept very high as of today. There is no realistic reason for the coal prices to be high. The other reason which has been there has been the fall of rupee in the last 7-8 months. Secondly, the central bank, the Reserve Bank of India, has been buying a lot of gold. In the last 1 year, the amount of gold they have bought, they have not bought in the last 3 years. So the central bank is also acquiring a large amount of gold that has been contributing to some extent in terms of rising. Now, this rise is not in gold bonds in particular because gold bonds are not so easily floated anymore unless they raise that gold within the country and then they raise them further. It has been locked for some time. The secondary sale of gold bonds is certainly taking place, but not fresh issues of bonds. However, the gold has been a very promising market, but we have seen decades back, way back in World War II, where Europe used to love gold as we do in India, traditionally and even today. However, they lost the charm of gold because after the World War, the gold had crashed to such a bad level that they never took up gold. And that's why you will see very light golded items, maybe 5 carat, 9 carat, happening and being sold in Europe. Now, that will not be happening, but we will see some sluggishness going forward. One caution which I would like to add on to my colleague's statement here is the fact that there may be some people, some traders who may want to sell and make book profits today. However, normally when the traders come in on an auspicious occasion, they try to book trades and make money, and they want to book trades and also create their books higher. They would not like their books to go down because that's what is talking about the stocks. But there may be some who may want to book profits because they know a lot of people will be buying today. And that could also result in some kind of caution. So small investors in particular should be very careful. Two sectors I will like to also identify which are critical and will not have impact. One is pharmaceutical sector. The second is defense. These two sectors are critical for the country because pharmaceutical has been growing tremendously and there are no tariffs even in the US put on the Indian pharmaceutical industry. Secondly is the defense, which India is very bullish on and has given the BrahMos and a couple of others, is trading extensively in terms of selling. This is something which we suggested way back in 2002 and 3 based on a defense officer study done at the institute. But I'm happy that this government, when Rajnath Singh ji came in, introduced the trading and selling of defense equipment, which has given a lot of boost to the scientists who work in defense area and manufacturing of defense in this country. So these two sectors are strong. Automobiles may be variable going up and down. EV will be strong for the next 2 years or 3, semiconductors and EV. But some of the other sectors which have been identified already have been informed by my colleague. So these are some few additional sectors which you could look upon, which have strong fundamentals. And given the fact that the Indian economy is bullish and it is not going to go down, irrespective of what is happening around in the world, I think that is something which will take the stock market along with it going forward.
I want to thank both my guests for joining me on the broadcast and giving our viewers an in-depth analysis